Hey, good morning, guys. So, look, I haven't done one of these for a while, right? This is a subscribers only stream. And I just want to cover a couple of things, right? Because I guess there's obviously some confusion, that there's maybe a little bit of um, maybe concern in terms of the market, maybe lack of understanding. I know definitely from a Bitcoin perspective, a lot of people can't quite understand how the market's not really moving. But when it comes to things like Forex, commodities in general, majority of stocks, you've got to take a step back, right? And if you're kind of new to this, or you've been doing this for a little while, and you still haven't kind of seen it as a big picture, all you really need to do is take a step out, right? Now, if you're looking at stocks for the long run, you're looking at you know long-term investments rather than trading, kind of intraday, weekly, even monthly. The reality is they're all different time frames in terms of what you as the individual are actually looking for, right? So, for example, I know some of you guys might hold stock for 5 years, 10 years. I've had these conversations with several individuals about this. And I know some of you guys are looking for, in and out, or potentially a combo of both, right? And I know one of the conversations yesterday was about, Bitcoin in general, and kind of DCAing to, a longer position, but selling ultimately altcoins to kind of cover the short positions and so on and so on. So everyone's got their own unique strategy, their own unique style. And this is where it kind of becomes harder to, I guess, kind of quantify one lesson, right? And also to kind of put one narrative on the techniques, right? So, this is where your own due diligence comes in, and it has to come in. It can't be like, oh, well, I'm going to say sell this now and buy this now, because everybody's looking at something slightly different, right? So, with that being said, if we look at kind of bigger picture, right? There's a couple of things that I want to share. I'm going to start with Bitcoin because I know that's what majority of you guys are, here for. I know Bitcoin affects the crypto market and so on and so on. So I'm going to start with that, right, to get out of the way. And then if you're not interested in kind of Forex and the other stuff after, then obviously, kind of stop watching. But in terms of the bigger picture, right, when I look at what I'm looking for personally, and this is kind of all the education that I do, I'm looking at this kind of almost just through my own eyes, right? And in a selfish kind of way, it's what I know, it's what I'm interested in, and it's how I want to see the world, right? So one of the things I posted yesterday in the visitor section, right, was I was looking at the comparison to the current situation. Let me just jump to present. I was looking at the comparison to the current situation, right, and the overall, where are we? What's the world kind of telling us right now, compared to what we were seeing back in the 1929 stock market, right? So I posted this if you missed it, and this is in the visitor section. And this is a bit laggy this morning for some reason. So anyway, long story short, I asked ChatGPT, what were the kind of the warning signs if you were to review this back and you were to go back and kind of replay this back? What kind of analysis, what kind of signals were already there, right? Now, ultimately, when you compare what happened then, what's happening now, you know, DXY, dollar index, will give you a really good feel in terms of sentiment, right? Now, that doesn't mean up or down. That doesn't mean, oh, buy or sell right this second. It means, what's the outlook, right? What am I looking for? Do I want to take a couple of trades this year? Do I want to keep hold of my capital this year and look at deploying that capital next year? Now, again, this is where it becomes very personal. You might say, well, I can't afford not to take a trade this year. Obviously, doing this for a long time, you've got the luxury of waiting for that perfect setup. I don't care if I'm waiting 2 years for a trade, right? And that's just a personal thing to me. Now, obviously, when it comes down to taking these types of trades, and I'm talking about, bigger picture at the moment, or I'll zoom in and zoom in and zoom in. I'm going through this checklist and I'm saying to myself, well, are we in this kind of speculative bubble? Are we seeing stocks overpriced, overvalued, earnings obviously not matching the current valuations? And all of these things are actually big, big signs, big, big signals, right, in terms of where we are in a grand cycle. Right? You then look at people like Warren Buffett, and a lot of people, especially in crypto, will say, "Oh, this guy's a dinosaur." You know, the reality is, guys, when the bigger players are selling, they're looking almost ahead of that curve in terms of where the crash will likely come, which means they use the profits that they've just taken at high, high prices to then buy much, much cheaper all the stock that they sold off back again, right? It doesn't have to be stock, pound for pound, dollar for dollar. It just needs to be the concept. Right? So, in theory, what you tend to find is these market cycles, right? And I'm just going to simplify this. These market cycles tend to work in a very kind of comparable way, right? What you'll have is stocks will shoot up, big boys sell out, which means they got a pile full of cash. They don't really want to keep that cash. So what they do is they kind of throw that straight into something like gold, right? It's a very stable asset. Gold shoots up. What they then do is they sell that. Now, retail are kind of chasing the tail. They're chasing this all the way through. It's, oh, stocks have just breached an all-time high. Let's buy. Oh, gold has just breached an all-time high. Let's buy. And then ultimately, they become that exit liquidity for the bigger player who's been buying that for some time, right? You had obviously the CEO of Nvidia. I posted this in the visitor section or the random visitor section yesterday. The guy's been selling something like $14 million per day in terms of his own stock, right? So all of these are kind of warning signs for the bigger picture. Right? Then obviously we got this, I guess the fairness in terms of bigger players versus the small players, and it only comes down to just thinking a little bit further ahead, right? And because it's not short term, this is how you can afford to do this, right? Warren Buffett isn't going to care that he sold off half of his Apple stock that he's held for God knows how many years. He's not going to care if he doesn't buy that stock back for 3 years. Right? He's not looking to be, oh, I sold out yesterday. Can I get back in today? Right? That's not how it works. Okay. Now, the next thing for me, right, is you see these politicians, you see these kind of players, I mean, even this speech that Michelle Obama has just given in terms of, equality, it's almost this facade, right? And it's not just, one side or the other. This is not political. This is just, kind of money versus retail, right? And kind of wealth versus retail, the 1% versus retail. And, it's always retail kind of on the losing side. So regardless of who's in office, what side you vote, what color you prefer, the reality is it comes down to common sense, right? Now, from there, the next thing you see is weakness in the banking system. Obviously, we've seen a little bit of this in the last 18 months, realistically, probably, even longer than that. But we're starting to see kind of, the cracks are starting to appear, right? Then obviously we've got this decline in consumer spending. Now, this can be viewed one of two ways. Right? Now, if you look at this decline in consumer spending, what we've actually got is inflation, and inflation will ultimately do that because people will be more wary in terms of where they put money, how they hold money, maybe feel that they're earning less money, and so on and so on. Right? So this is where now we come back to Bitcoin. Ultimately, the one argument for Bitcoin is, oh well, Bitcoin's ever going to go up. It's going to keep going up, and it's always going to go up. It's an inflation beta, and therefore, if we're earning less money, let's kind of throw our money into Bitcoin, right? However, the biggest question then needs to be asked, why aren't these bigger players doing this, right? We've talked about things like the CEOs of the ETF providers. They've talked literally about retail being 90% of the ETF buyers. Your leverage funds, obviously, net short. And you've got all these little kind of signs and signals that are kind of saying, hey, we're not about to move just yet, right? So when I look at a chart, I've just kind of covered everything that I want to cover in terms of how I'm looking at this when I'm trying to take a trade or assess a trade, right? Now, just to be clear, I'm not interested in Bitcoin, right? This is kind of, I've had my fun. If this drops back down to 20 or 30, I might buy another couple just for the hell of it, right? Just in case, it does go to 49 million. But in the grand scheme of things, right, it's a punt that I can afford to lose, right? And if it goes to nothing, it's not cost me anything, right? That's how I'm seeing it personally. Now, if obviously you're fully vested, you're fully committed, you've bought in, whether it's 10 grand, 20 grand, 50 grand, 60 grand, even you bought the very top at 73. It needs to be personal to you, right? What do you want out of this, right? And that's the only way that you can see this. It's pointless coming to me and saying, should I buy this now? Should I sell this now? It's personal preference, right? Would I buy this now? No. Would I sell this now? No. Simple as, right? It's only because I've got what I've got out of it. I'm happy with what I've got out of it. And then ultimately going forward, if this becomes an investment tool and something that I can see the cost of the investment is far less than the cost of another investment, then I will use the instrument regardless of what it says top left hand corner of my chart. Right? If it's something that makes money, great. Right? Now, the reason that I say this is different for me is buying the bottom, kind of selling the tops. That's great, and I was lucky. Right? That wasn't skill. That was just right place, right time. There we go. Right now, when it comes down to using something like euro or Aussie dollar, the benefits that I have there is that whether it goes up or down, I care less. I've got no emotional attachment to a rally. I've got no reason to jump into an echo chamber going, oh, I think up, I think up, I think up. The reality is it's more established, right? So these are the things that on a shorter time frame, especially, it's just so much easier to make money. Right? You can kind of take the market in every which way at any time, all the time, right? And Bitcoin will get there at some point. The only problem being is that the parabolic moves will disappear because it'll become stabilized. And the more stabilized it becomes, it'll be 1 or 2% left, 1 or 2% right, 1 or 2% up, 1 or 2% down, and that's the way it'll steady itself up, right? Now, when I look at this current situation, right, I talked about this. Let me just see if I can find. I put the 3 posts that I wanted to show. I talked about this, a year, maybe even 18 months ago. I know Ryan had done Complication, covered this as well. We've done obviously a stream together, and I want to just go back through these kind of 3 options, right? And this kind of brings me then into the forex side and the stock side and the kind of the whole educational aspect of this, right? Is that when you look at where the price points are, they're almost less relevant than the character used to get there, right? And the character used is a very strange term, right? But what I mean by this is if we had come down, right, and kind of dropped out, we would see, right, an accumulation. Now we almost jumped out of an accumulation, right, which means for me right now, at this particular point, right, this was the accumulation phase, right? Now, if you stick volume profile on and everything else, right, you're going to see that there's enough there, but it's not massive, right? And it's not massive in comparison to where we were already sitting with the cells. So going back as far as the move at the bottom, we could clearly see that if we weren't getting a pullback into accumulation, if we weren't getting this ABC move as Ryan's got marked here, right? And this was based off my chart initially. We've had this conversation. If we didn't come back in for that C, we just didn't accumulate enough, right? And the beauty of not accumulating enough is that there's only so much fuel in the tank for that rally for the big boys to remain interested. Because at that particular point, they want better prices to come back in to push it up higher. So this is almost like the test of the water. Okay. Now, what you have obviously is liquidity up and around these levels, right? And we've come in and tapped in, tapped in, tapped in, right? Which means, we're almost kind of out of that kind of upside liquidity. What you then have to look at is what do we have to the downside? Well, there's clearly a big gap, right? There's clearly a gap. We've got, I'm not sure if there's a gap in there, but we've obviously got the main area of interest there in terms of that kind of sideways action. So this was kind of, a respectable price level, which is around 42, right? And I think this has been, kind of pitched around things like Twitter enough for it to be an acceptable level, right? Now, obviously, I wouldn't be surprised if we come down, something like this, we get down there, we kind of shoot back up again, and then we come down even further, right? Because, what you have to look like, right, is the move from 2009 through to this peak, is 12 years. We're not going to get a 12-month pullback and be done with it, right? If this was a major move, let's assume this was even the one. Seeing a move A, B, C, right, could take another 2 years. And that's not being unrealistic, right? That's just being, you know, conservative, I guess, right? So it wouldn't surprise me for a slow burn type move, right? In something like this. We could see the complete opposite and it becomes a very fast trend down, followed by a slower move up just to confuse the matter, right? Now, in terms of what we're seeing from liquidity, right, that's one thing. The second thing is, when I look at this particular chart, I'm seeing a high. I'm seeing a lower high, right? I'm seeing a low. I'm seeing a lower low. I'm seeing another lower high, another lower low, right? And I've marked these off where basically the price has breached through that low, right? The price has failed to breach through the high. So in anyone's books, right, even in baby pips, and you go through the very basics, when you have a low and you have then a lower high, followed by a lower low, followed by a lower high, followed by a lower low, it kind of shows a downtrend, right? So for me right now, there's nothing to be bullish on, bigger picture, right? And therefore, this is a controlled move. And this could last months. However, going back to what I've just talked about with the stock market in general, right? And talking about 1929, talking about the current situation. I mean, I even posted, I just looking at this here, even looking at the agricultural side of things, right? I've been looking at these types of things kind of in depth. Obviously, this was quite comical. Um, I've been looking at obviously how many farms had been closed down, the number of farms. This is again just kind of aimed at the US because of COT and everything else. I've just used the US as kind of a sample size. It's a big enough position. The world obviously tends to use dollars for most of its buying, and therefore the US is a good a good area to look at, right? So with all that being said, when I zoom in, I'm going to finish off with Bitcoin before going into the forex. Some of these things and some of these posts, right? This goes back to January, right? So we're talking now nearly 9 months, down the line. We've talked about things like, how much money is needed. We can talk about the price multiplier and all this kind of, crap really that a lot of people are just trying to find. I wouldn't even say logic. They're just trying to find excuses as to why the price has to go up, right? Oh, Bitcoin's early. Guys, we're talking about January 2020. Sorry, 2020. We're talking about January 2009, right? We're now 2024. So, all early adoption, right? We've talked about things like the ETFs, right? Just that to re-highlight, re-emphasize all of this, right? BlackRock's biggest ETF, all around iShares in the S&P 500. We're talking about a fund that was formed in 2000, 2001. So again, 20 years. We're talking about 354 billion in that particular pot. Even if Bitcoin was to come up and match it, right? It doesn't have to be overnight. What else have I shown? These are the kinds of things just over and over and over again, right? Talking about the number of ETFs, let's go back. I think the biggest number of ETFs in play was around this one, right, to 2021. Sorry, 2022. Yeah, I think it was this one year. So this was, 2021, 2022, right? This was really the biggest amount of money in the pot, as well as the most ETFs in existence, right? Now, this might have changed, obviously, in the last year or two, but it's not going to be down to crypto when we've added so many, because of crypto. Crypto's a very small number in a big pot is kind of the message that I'm taking away from this one. So, we're talking about a $10 trillion global asset under management class in all of, let's round this down to 8,000 ETFs. We're talking $10 trillion across 8,000 ETFs. Right? We're not going to see a spike in a BlackRock ETF for Bitcoin to $1 trillion. It doesn't work like that, right? So I'm just being realistic in terms of the situation, right? We got leverage funds, whether they're covering their position, whether they're selling off. The way that I'm viewing this is that retail sentiment is bullish and they need to be buying coins from someone, right? Therefore, who's the guy selling this? This is someone like myself. This is someone who's bought in early, happy with a profit, and ultimately willing to turn that paper gain into a real gain to kind of enjoy life, right? That's kind of the point. So, next thing, this now brings me into, I guess, the next play for the DXY, right? When when I talked about these moves from Bitcoin's point of view, right? How we could see in advance that we were going to see buyers at 65K, right? And then we're going to see 45K or 40K very quick, right? This was the Bitcoin call, right? This goes back obviously 24th of August last year, right? So actually it was the year before, was it? It might have been 2021, 2022, sorry. Okay. So in the grand scheme of things, look, right? The reason that this is important to why I switch over now to DXY is I talked about a level being 108 on DXY. Now that doesn't necessarily mean we're going to dance straight up to 108. I talked about the level, which again goes back maybe 18 months. I talked about the level 100.70, right? And this is the level that I've got drawn on the chart. Right? It was 100.704. Right? Now, I can't even remember why this level was a level, right? I'll have to go back and find the exact posts. However, the reason for me that I like what I like on this is not on a small time frame, it's on a bigger time frame. Right? Now, do we actually look bullish or bearish in a move like this? It's kind of hard to tell. There's nothing obvious pointed out. If I zoom out the time frame, now what am I seeing? I'm seeing a completely different picture in that sense. So 108 for me, what it does is it clears this upside liquidity. We're probably likely to come back in and retest, right? Because we're going to have a break of structure at that 108 level, followed by a retest. And then I think we come after this, this key level, right? Now, the reason for this is, given what I've just shown in the visitor section about the Wall Street crash, right? All these big players like Warren Buffett, your NVIDIA CEO, probably Bezos, Bill Gates, if you look into any of these guys, I wouldn't mind betting we're in a similar situation with sell-offs, right? What would this do in terms of the bigger picture? What would this do in terms of the economy, right? So at the moment, the fact that we've come back down to this level means that nothing's really changed, right? We've gone up and we've come down. We haven't reached this low. We haven't taken liquidity, any further, right? Which means the beauty of this particular move is nothing's changed, right? Now I'm not looking to go in and say, oh well, tomorrow I'm gonna buy anything that's kind of correlated to the dollar. I'm saying for a bigger, longer term bias, this gives me more confidence that something is about to change, right? If I stick the stochastic on, let me see if I can find this. If I can stick the stochastic on, what I like about this personally, right, is that retail sentiment is bullish. We got these big boys selling off. The COT data on the DXY is flipped in the last couple of weeks green, right, which means there's buy-in actually going on, bigger picture. We've got the stochastic at a level that is oversold, at a key level of liquidity going into the future. Right? These are all big telltale signs for what I want out of a trade. Right? This is to take, 1,000 pips out the euro, 1,000 pips out of Aussie dollar. This is to give me the next 2 or 3 years worth of, not needing to trade. Right? This is the type of trade that I'm looking for in these types of deals, right? So with that being said, when I look at the big picture and I look at what we've, pieced together just in this one video, right? What I'm looking for now is the assets that I'm actually assessing. So Aussie dollar I use for the big time frame, right? This is the kind of trade I want that 1,000 pips from. Euro I've been using more on that kind of intraday type of move, right? I've been looking at the euro for even scalping, right? I've been taking, sometimes silly amounts in terms of pip size and taking very tight, very small stop losses, right? And just taking 3, 4, 5 pips just almost at will, right? And it's a nice little way when you've got the comfort and the confidence in it to kind of see it even on the small time frame, because I'm only trading in the same direction as the larger time frame, right? So by this, what I mean is, if we look at something like stochastic, right? A lot of people will see stochastic and they will say, oh, well, when we get into this zone, we're going to sell. You don't need to, and especially with a false bar. You don't need to. The point being is, we've seen this up move, right? At the moment, we've still got room to go on the stochastic. So I'm going to zoom in and I'm going to say, actually, you know what? What is the logic for this to pop above here? Right? These orange lines, I can't remember. I'm not sure if I shared this with Paul and this was a private DM, or whether this was actually in the musing channel. But I look at this chart and someone asked me the other day and I clicked on, and I hadn't looked at Aussie dollar for months. Not like this, right? Not on this time frame. And therefore, we've had to move down. I'm expecting to move up, right? I don't need to take this trade in terms of it being, religious. I don't need to be in this trade 24/7. At the moment, I'm not interested in this trade on this time frame, because my bigger view is going against that DXY move, right? When I'm ready for it. Now, if DXY gives me the change of character, DXY starts to break those structures on a smaller time frame at the level we're at with the weekly stochastic being oversold, that gives me logic and reason that when we come up into liquidity for Aussie dollar, I've got a pretty good short that I can take for the long run, right? And that's you're talking about from 700 all the way back down, even down to this liquidity level there. You're talking near enough 750, 800 pips, right, on something that you can be, pretty confident on, right? So for me, I'm not looking as in, oh, where do I jump in? How do I get in? What I'm looking for is larger scale logic, just like you would jump in on a minute time frame. I'm looking for these weekly candles to tell me a similar story, right? So if I was to take this as a trade today as an example, what I'm doing is saying, okay, well, if I was to take this right now, I got weekly up, right? So that's my general bias. That's my general direction. I'm not even looking at, liquidity levels or anything else. So my general direction, right? We have a false bar on the daily, which means ultimately, yeah, I want to grind up. We are tagging close to liquidity here, which means there's another at least 80 pips sitting in this. Why would I short this as a move? Oh, because the stochastic is overbought. No, I'm looking at this on a larger time frame and just going with the trend. Trend hasn't ended yet, and the trend is your friend, right? So for me, taking money out of this is the easy bit, right? This is the bit that you can do, all day, every day. Everything I've just shown you there, you just need that bias, right? Where's the bigger scale liquidity? What's the bigger trend saying? Daily is up with a false bar, right? We've got weekly up, not quite into the oversold, and we've got liquidity just above. Where's my bias? Ta-da! It's as simple as that, right? I'm not overcomplicating it. I don't really care, much for anything else. Similar kind of thing when it comes into euro. Right? I'm looking at this and saying to myself, where are we on that euro picture? We have a false bar on the daily to the upside. Right? I'm going to come back out to the weekly and I'm going to see where are we on a weekly. Do that. So on a weekly, we're a little bit further ahead than we are on Aussie dollar, which is almost a good sign for Aussie dollar because Aussie dollar will try to catch up with a similar move. Right? Now you can get fancy, technical. You can measure the percentage between this candle and that candle and the one on the Aussie dollar, and but why? Right? Why? What I'm looking for right now is where are the obvious plays? Well, we've got literally there across here liquidity. Where do you think we're heading to? Even at the first target. That's good enough for me to make money out of short term. That's 100 pips away. Drop down to a 5-minute chart and a 50-minute chart. Right? Start playing with this. So the thing is for me, I'm going to finish this video off. I know this one's a longer one, but I'm going to finish this video off. Right? Whether it's gold, oil, SPX, Bitcoin, or any Forex pair you like. Right? The truth of the matter is, my view is I want a long-term trade, probably Aussie dollar. That's the one for me. That's going to be, 800 pips plus, bigger move, right? And whether that's down or up, I don't care. I'm looking at the DXY in terms of the general sentiment across the world, right? This is kind of my economic calendar, if you will. Right? Where are we? Why are we where we are? What am I seeing next? And what would that mean for the bigger picture? Right? What would that mean for the general economy? And then looking at that sentiment from the general economy, well, Warren Buffett and so on are selling off stocks. Retail traders are going, oh, this is never going to end, up, 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 and more up. And who loses? Right? So the, the trick is, instead of trying to complicate this and trying to make this too difficult kind of on yourself, take that step back, look at the view from the bigger picture, and ask yourself why. Right? Why up on this or why down on that, right? And when you start putting the pieces together across the whole spectrum, one, there's no reason to jump in, and two, if you want that, let's go gamble on a smaller time frame. I haven't talked about Elliott waves. I haven't talked about Wyckoff. I haven't talked about anything throughout this video. I'm talking realistically about just the general common sense in terms of using sentiment in your favor. And therefore, when I zoom in and zoom in and zoom in, I don't care if we're at the fifth wave of X. I don't care if we're at, QIA of Elliott wave cycle 3. None of that matters, right? The real value is where we're at right now. The sentiment is kind of slapping you in the face. Right? So, although I can zoom out and I can start using Elliott as my bigger bias, I can start, all I'm doing is adding confluence to what the charts have already highlighted. Right? So if I was to go and plot an Elliott on DXY, I went to plot an Elliott on Euro, I went to plot it on Aussie dollar, Bitcoin, right? The thing is for me right now is I'm just seeing if we're against the dollar, we're probably at a high because the dollar's down low. I'm expecting that dollar to turn, which means if it's gold, if it's stocks, if it's euro, if it's Aussie, if it's Bitcoin, something's going to happen that forces them down, allowing composite man, right, professional traders such as myself, to buy what I want to buy on my terms and cheap, right? And that's what I'm seeing as the next play, the next move. And therefore, this is why I wanted to put this video together. It's a very long-winded one, but I hope this kind of, puts what's in my brain, kind of over to you guys in terms of being able to see what I'm seeing, why I'm seeing this, how I'm looking at this, and how, you need to just take a step back to assess this from a bigger scale first. What you then do is you step down, you step down, you step down, you step down to the time frame or the factors that you want, the asset class that you're looking for. And like I said right at the start of the video, this is all personal to you, the individual, you, the trader. It's only you that get to control what you want to invest in. I'm not going to say buy Bitcoin here. I'm not going to say sell Bitcoin here. I'm not going to say to you, oh, SPX is done, get out of it. I'm saying to you, bigger picture, this is what I'm seeing. Could be completely wrong. And if I'm wrong, I'm not in a trade, right? That's the beauty of this. And if I'm right, trades will start presenting themselves when I'm ready. Right? And this is where the change of character comes in. This is where that bigger picture comes in. This is where you can zoom in and use your Wyckoff. This is where you zoom in, master pattern, zoom in, fair value gap, zoom in, order block. It's all interconnected, right? It's just a question of how you use it, where you use it, and kind of why you use it. For me, bigger time frame, it's less info is good enough. Get that change of character on a weekly time frame or a daily time frame, confirming the week, and there's enough pips there for the next 6 months worth of money, right? That's the best way for me, I find personally, in terms of just being relaxed. I'd rather drink wine. I'd rather play golf. I'd rather cut the grass and attend to my bees. Right? That's the beauty of it. So anyway, have a great weekend, guys. Hope you enjoyed this one, and see you on the next stream. Cheers up.